Price action trading for beginners. I'm going to talk about price action trading for you because, well, there are a lot of people that want to start out in the stock market, and there's a lot of information out there. So the first thing I'm going to tell you guys is don't change your system every 5 minutes. Choose a system and stick with that system. It's really important because you're going to change the system 100 times. Look, you're going to spend some time needing to get used to the stock market. That's really important. Getting used to the charts, getting used to the patterns and that sort of thing. But I can show you a system in 5 minutes here for free that might get you started. You can choose all these fancy systems and really complicated systems if you want to. You can spend thousands on courses. By all means, go for it. It's up to you. Personally, I don't believe it's necessary. I think if you just gain experience and trade small to start with, maybe have a demo account. Just remember, a demo account's not like a live account. You get a slightly different psychology there. It's easy to trade a demo account, really difficult to trade with your own money. It's not the same, guys. Just remember that. Okay. Anyway, so I'm going to get to the chart. I'm going to show you kind of a system here that you can work with. It's the one I use. It's support and resistance. Sometimes I use supply and demand. But today we're just going to talk about support and resistance. We're going to go through that. And hopefully that price action will get you started. What we do is we look at the chart and we just flow with the chart, guys. Just flow with the chart. Hey, it's Rob Guilty. It's logical trading. Just remember that trading is risky. If you don't like risk and you don't like losing money, don't trade. Simple. Okay? Go with that. So, let's get on the chart. Let's have a look at how we trade support and resistance. But before we do that, go and have a look at my blog. It's a secret blog. Trade every day. 10-15 seconds of your time. Nothing more. Visit the secret blog. Free trade on there every day, which I post totally free. Guys, it's not financial advice, just a trading idea. On the blog as well, you'll see on the left, little PDF, free Forex book, my gift to you, asking nothing for it. But enjoy the trade every day. It's always nice to know what everybody else is doing, isn't it? So now that you've seen the blog, guys, you can follow those trades. Just remember it's a trading idea. The one thing I always tell everyone, trading the stock market is a 50-50 game. I'm a 50-50 trader at best, and that means you win 50% of your trades, you lose 50% of your trades. You can't have a 90% win rate. It's impossible. If anyone tells you they've got a 90% win rate, they're probably bullshitting you, okay? No bullshit. You're going to struggle to get a 90% win rate. You'd be very lucky to do that. And if you do that ever, you get a 90% win rate, do me a favor, don't get overexcited, because that's when you're going to take losses. That's when it's going to go wrong for you. It always goes wrong when you get a 90% win rate because you think nothing can go wrong. You throw it all in and then you lose it all. Watch out for that, guys. Anyway, let's get on with it. Get onto the chart because you're waiting for this, aren't you? You've been waiting for how long? I don't know. How many minutes is it now? Probably a few minutes. You've been waiting for me to get started on this and we haven't got started yet. So let's get started. I've been rambling on and that's really not what I'm here to do. I'm here to show you the system. So okay, let's get on with it. Right, so if we go onto the chart, before I show you how I got to this, I want to show you effectively where we are a little bit further back, all right? And then I'll show you how we got to this. If you look at this, you can see I've got an area drawn in here. This is a support or a resistance. Can be one either or, support or resistance, okay? Now, you'll see the price went in here. Now your first initial thought on this probably would have been, we're probably going to go short here. But no, because if you look at this guy, it's got a long upward trend, right? That's an uptrend. That is not a downtrend, guys. That's an uptrend. We're on the 4-hour chart here, by the way. That is an uptrend. So stay with the trend if you can, because what you would have been doing is trading against the trend. In other words, saying, well, it's got too high, I think it'll go down now. It's possible. People do trade that way. We trade that way. But it's better to stay with the trend. So before you take this trade, you want to make sure that the red bar has come out of the area or if you've got a green bar, right? So let me just remove that arrow. So what actually happened? Move this along, look what happened. What happened was we got a green bar, a confirmed green bar, and not only any green bar, a big green bar. Okay, this is a big green bar. So what we would have done is we would have gone long here, right? And we would have followed it, and at that point we probably would have had a trailing stop because that would have been the target, and we would have got out of the trade. So I just wanted to give you that idea that you would have been thinking we might be going short here. If you get in too early, that's what it's going to do to you. You wait until it confirms, goes out of the area, gives you a nice big green bar, or even a little one, it's fine, as long as it's confirmed and it's closed. Not an open bar, closed bar. Then you can trade. Now if you follow it along, you'll see here you could have taken another long trade, but now we're actually calling another long trade if it comes back down into this area. Okay? So I'm going to remove all of these drawings and show you how we come out at this area so that you can do it as well. All you've got to do is you've got to take the 4 hour and put it on a day chart. This is the DAX, by the way, Germany 40. So now you've got it on the day chart, right? On the day chart, put it on a line chart and have a look at what you got here. It's easier to see the points on the line chart. Then all you got to do, we draw blocks in because straight lines are very, very accurate, and you're expecting a price to bounce off an exact line. I don't know. Give it a block, give it a bit of space, right? So what I normally do is I'll draw it off this area. So I'm just looking at this and thinking, okay, there's 1, 2, 3. You've got to have 3 points. You've got to have 3 touches, right? So those are your 3 touches. That looks like a really good, reasonable support area now. We call it support because it's at the bottom. We call it resistance when it's at the top. Don't draw millions and millions of lines on your chart. I've seen many a trader teaching people to draw like 400 lines and resistance lines and crap all over their chart. You're going to get confused. Keep it simple. Keep it as simple as possible. 2 blockies is the best. 1 at the bottom, 1 at the top. That's always good. You can put a third one in just to like remind yourself of a supply area or something like that, but try and keep it simple, right? Now what you do is you put it back to the candles, because the candles, what the candles do is they tell you there's a bullish momentum or there's a bearish momentum. The tails will tell you that the sellers are getting out or the buyers are getting out because there's a long tail. You know, the undecided ones and all these different little things. And you can also pick up the double tops, the double bottoms, all these nice little things from the candles. So keep an eye on the candles, because one of the big things with the candles as well is, for example, if you look at this, 3 big moves like that, that actually gives you a nice demand area down there. So, you know, if you get 3 big red ones down, that gives you a kind of a supply area. So, you know, you look at it and you think, it actually falls into place as well, falls nicely into place here, right? Now what you do is you take it back down to the 4 hour or the 1 hour or whichever time frame you want to trade on. All I say is take your levels from a higher time level because they're more accurate. I particularly like to take the day level because it's very, very accurate in comparison, and then I can trade on the 4 hour or the 1 hour, the 15 minute, the 30 minute, whichever I feel like, okay? So let's have a look at this now. So now you've got this coming down into this support area quite nicely. Okay, as we saw earlier, it's already the trade we were looking at earlier. Now what you do is you look at this and you say, well, it needs to come down, at least down into the area, right? Somewhere down here at the 164.50, 164.70 area. We're at 165 now. So your idea is it's going to come into here, and then it's going to turn, go up, and give you a nice big green bar somewhere here, confirming that it's going back up. And the reason I'm looking at a long trade is because if you look at the overall picture, the trend is up, and the trend is your friend. It's going up. This could be considered a rather large flag pattern, and they normally continue on upwards. That said, we could have a double top, and this could be crashing back down. And if in that event it does that, and it's not to say that it won't, then what will happen is this will break through here. It'll break through this level, okay? It'll come back up, and you'll get a red bar confirming down, okay? Believe me, it's not going to be as simple as it just breaks through and goes crashing down. It will always, it'll come through, it'll go back up, and then it'll go down. Okay, that'll be your nice red bar going down. Nothing can predict the future, remember. So while we're looking for a long trade, this trade could also go short. Well, what do you think? It always could happen, right? I mean, these things are not set in stone. These are things that can happen. We don't know what the future is here. I'm not like other people who teach you and go back on the chart and do a reconstruction of the whole chart, and we know what's going to happen next. We really don't know what's going to happen next year. If we take this long trade when it's ready, we don't know if it's going to succeed. All we can do is pretty much put a trade in when it's ready, put a profit level target at about 170, and we're going to put a stop loss below that low over there. In fact, a little bit into the middle of that big green bar over here. Okay, so that's below this lot, right? That gives you a clear area to work in so that if it pops down. But my kind of way of trading is if this starts messing around down here, I'm out, because my trade has invalidated. I would not take that trade long if it was trading somewhere in this area, okay, because it's gone. So I'll probably get out long before it reaches the stop loss, taking a small loss and waiting for my next trade. But if it goes long, I'll actually add to the trade in these areas because I expect it'll go quite high. And that is as simple as the trading system gets. I'm not going to show you supply and demand today. This is price action trading for beginners, just so that you get an idea of how price action trading works. If you're trading with a different system, let me know in the comments, and if you want any comment on it, I can put a video together on it and I can show you how to improve or better that system, or how to trade that system correctly if you're trading it wrong. I don't say you should trade your system and do this, but there are a lot of indicators out there that you don't need, that you should probably take off your chart. And I just prefer this because it simplifies everything, and the main reason I trade with this system is because I can manage my risk. That's as important as it gets. I can manage my risk. Guys, like, comment, subscribe, go check out the next video. Thanks for watching. Cheers, bye.